can move on. So the next speaker that I want to introduce to you is a very, very special friend and has been influential in my life in helping me get to where I am today. Now, Gary mentioned that I closed 90-some transactions, investment transactions in the past 20 years. 10 years. 20 of them are through Mike's group. And Mike's group is the group that Steve introduced me to 10 years ago. And I had my IRA, and all I could afford out of my IRA was a down payment on 2 houses. And back in 2008, that wasn't a lot of money, right? So I had this IRA, and I was trying to figure out what to do with it and how to make it do something for me. I came across this group that does everything for me. So I had done it myself. I felt I was a good real estate investor, but I figured out real quick that I wasn't a good property manager. I don't like taking the phone call when the well goes out. I don't like the phone call when I need to evict. And I let somebody stay in for like 4 months too long. That's not me. That's not who I am. But I did like the power of real estate, and I really wanted to make it happen in my portfolio. So when I was introduced to this group, I learned very quickly that they were more than willing to get out of my backyard. So I was investing here in Colorado Springs. How many of you invest in Colorado Springs? Okay, we've got to get a good handful of this. I was investing in Colorado Springs, and frankly, our price points are too high for the rents we get when you look at the numbers. So once I met this group and realized that they had the team set up everywhere else in the best markets with the best landlord laws, with the best rent ratios, why was I trying to do it myself? For me, it was an investment. I wanted to make money. So Mike Chamberlain has been 20 years helping people improve their finances. He spent 15 years as an advisor, as I have. He's loved just adding the dynamics of real estate into the portfolio, and he is teaching me a ton as we go. He loves helping people and helping them create that life that they want. He's a BYU grad in psychology with his master's of public administration from Marriott School of Business. He has served as president on many different boards, community, nonprofit organizations, and he's from Pleasant Grove. I was actually from Colorado for the last 50 years, but he's from Pleasant Grove with his wife and his 4 kids. So please help me welcome Mike.
Well, thanks for having me. This is not my first time here, but I love every time. I've actually been to Colorado 3 times in the last 3 months, and I am jealous of you. I thought as I was coming past the academy late last night of Tony Bennett, or not Tony, oh, I forget the name now, but leaving his heart in San Francisco. I kind of feel like I've left part of my heart here. You guys have it good. You know, grateful to be back. Great audience, great group of people that I love and resonate with. I'd be curious to hear from you. What got you into real estate? What is it that you liked about real estate in the first place? What is it that you hope that it still does for you? Anybody care to just shout out a few things now? Why are you agents? Why are you realtors? Please. Yes. Love it. It's a common thread, I hear. You're good people that want to help other people out. Anything else? You like the money. Good. We are capitalists. That's a good thing to like and expect out of this. Anything else real quick?
Being out and about and everything's always changing.
Oh, I love it. Variety is good, and being able and having to stay on the cutting edge. That's obviously why you guys are here. I believe in the law of harvest. I believe that getting out and educating yourself and following it up with action, of course, absolutely bears fruits eventually. Not always on our schedule, but always eventually. And I love what you guys are talking about. That is something that for me, I was kind of a latecomer to real estate. I was doing the traditional financial planning route. I enjoyed helping people that way. Realized what real estate could do for others, and joined this team, partially because of the people, partially because of the power of real estate about 5 years ago. And I'm amazed at what it does to often supplement and really can supplant what somebody else is doing to try to get ahead with their financial future. You know, real estate works. It's a admirable, noble field, I think, that we're all in, for the impact it can have with others. And we get it in this room, obviously, but so do most people we cross paths with. Gallup poll's been doing surveys on hundreds of topics for the last nearly 100 years, 90 years now. and they've surveyed individuals out across America. What do they think is the best long-term investment? And when you include real estate and stocks and bonds and money sitting on the sidelines and savings account and gold and commodities, real estate for years has been at the top of the list. You know, people get it. It's something people want to do. They're not always able to. It takes some money. Of course, there's no money down. In other ways, you can't do it. But if you're doing the conventional route, it takes some money to do it. It can be scary. Everybody who knows about it really wants to do it. And of course, there's lots of different reasons for that. They recognize, though, it's the way that a lot of people have made their wealth. And if it wasn't how they made their wealth, it's how they have maintained their wealth after they made it through a tech bubble or a tech unicorn or whatever else they might do. They often diversify into real estate for the protection that it could provide, but also for the benefits of saving more of their money with the tax benefits and the legacy plan and everything else we'll get into. So people recognize that. It's a strategy of the wealthy. The strategy of the wealthy that I've learned sitting across the desk from hundreds of people over the years is that they will buy, borrow, and die. Does that make sense to anybody? How is that a strategy of the wealthy? Buy, borrow, and die. I'll have you think about why that is, and we'll hope to answer that by the end of the little time here together. But that is a strategy that the wealthy do. And I like to think about the Monopoly playboard, you know, going around, of course, pass and go. What do you get when you pass go in Monopoly? $200. Do you know what they call it? A salary, right? So if you're in the rat race and you're turning time for money, you absolutely will get paid, can get paid. And sometimes that's the strategy. That's often the strategy of the people out there. But of course, if you pause along the way and build assets, if you buy, and if you borrow to buy more of those assets and get that money working for you, I love Kelly's insights on leverage, the power of leverage. It can have dramatic impacts for one's financial future. Warren Buffett gets it. Warren Buffett's the greatest stock investor ever. Of course, you don't think of him as a real estate guy. But Warren Buffett, about a decade ago, was being interviewed by CNBC, and he said this quote: "If anyone is thinking about buying homes, it's probably as attractive an investment as you can make. If I had a way of buying a couple 100,000 single-family homes and had a way of managing them, I'd load up on them." Okay, so this great stock guru, well, I love hearing his insights. I love his experience and what he can do to help investors in general get the game of investing. Recognizes what real estate can do. There's a quote that Warren gave where he said that, of course, he's into buying quality companies that he gets and understands that he'll hold on to forever. Quote, one time he said, "If you're not going to own a stock for 10 years, you probably shouldn't think about it for 10 minutes. Okay, and we kind of adapted that over at Dumpy Real Estate for our investors. We're a buy and hold investment company, making strategic moves along the way when it makes sense to upgrade, sell old and buy new, but stay with real estate forever is the concept. And we have that strategy where if you're not going to own it for 5 to 10 years, you probably shouldn't think about it for 5 to 10 minutes. And of course, we can see why with what's happened in the market this last year. You know, we're certainly going through a correction. You guys have experienced it. It got crazy for a while, and it may get crazy again. We'll see. But across the nation, there have been areas where real estate's gone down. From its peak over here on the left, sometime in the summer of this last year, different peaks in different markets, to its trough, you know, real estate was down here in Colorado Springs. They were suggesting about 5%. Does that sound right to you all, or does that sound? Yeah. Yeah, people can get it at a discount. It's what it's like to buy things on sale. If you like to buy a shirt on sale, this is what it's like to buy real estate on sale. Sure. And so areas of the country, it's gone down. And obviously, as you can see by the colors, in certain areas, gone down much more dramatically than other areas. So this is peak to trough over here, less than a year's time. This is what it looks like if we give it a full year's time, March of last year to March of this year. Okay. Do you see anything here? Anything stand out about these colors? Anything surprising when you look at this chart here? There's a, yeah. Yes. Yeah, the less time you have, the more potential loss. Over here, the less potential of a loss. So this is 1 year's time here. And in Wall Street Journal, above the fold article today, if you go and look at it, talks about a third of the real estate markets across the country have gone down this last month. Okay, a third of it. And you hear about it all over the news, of course, the uncertainty in the real estate market, what might happen in the real estate market. Is there any other way you all think they could have titled that headline? Of course, they don't do it because they're the news and you try to get eyeballs and people paying attention. What was that? You got it. If a third's going down, that means 2/3 going up this last month. And so one thing I like to emphasize, do not buy real estate. It's not the right investment for everyone. Don't buy it just because you heard it's a good thing to do. But if you have a risk tolerance for it, and if you have time and you have some resources, if you can give it just 3 years in a tumultuous time, this last year, including that time, but just going back 3 years, this is what it's like to own real estate across the nation. Here in Colorado Springs, this report suggests that home prices are up 28%. And back here, it was down 5% from peak to trough, down 2% in a year's time. But in 3 years' time, boy, worth a lot more, 28%. That's not normal, of course. We had a bubble. We needed a correction. That's a healthy thing in the market. But boy, real estate with time just works. I've done hundreds of reviews with our clients. We've helped about 1,500 people buy 5,000 homes. We do ongoing annual reviews with them. We check in, we study the markets and the experience that they're having. Every single time I've reviewed somebody's real result, even when there's some messiness included, like there was a pandemic and the tenant wasn't covering the rents all the time, or there was a surprise repair that wasn't found through the independent inspections. Every time we even include the messiness of real estate, it does not always work in a year or two's time. Sometimes you just get to break even because of the fees involved. But in 5 years' time, it's always made money, more than anything I ever helped somebody make when I was an advisor with just stocks, bonds, 401ks, and IRAs. Always more, usually double, sometimes triple the total return, depending on what's happening with depreciation. It's just powerful what it can do. And of course, there's lots of different ways that it can help benefit somebody. But if you compare real estate to what else somebody might be doing, what else you might be doing with your own money is real estate enthusiasts and people who, of course, want to set up their own financial future, as well as their clients. Real estate compared to what else most people are doing is not a straight line. So down here at the bottom chart, we had a tumultuous time back in the Great Recession, of course, worst time in any of our lives, worst time in our parents' lives, where if you bought real estate in 2006, you would have had to hold on to it for about 6 years, 2007, excuse me, to get back out of it, what you put into it. It doesn't always go up, but is it worth a lot more today than it was 50 years ago? Absolutely. Stock market doesn't always go up, but it's worth a lot more today than it was 50 years ago. But the difference is that volatility. I was sitting across the desk when the stock market lost 57% back in the Great Recession, 08 and 09. 57%, you lose half of your money. You start to wonder, am I going to lose the other half? And you pull out. Fear and greed always kicks in with the emotional investing. And so, to lose 25% in a year's time last year, 34% in a month's time when COVID hit, 50% twice in 2 decades, 2 different times in the last 2 decades. It's a good investment. I'm a big fan of being diversified. But to give somebody a chance to actually stay on board and arrive at their destination safely, I love what real estate can do to add peace of mind, to help somebody get ahead and actually experience the long-term benefits. And so just love the power of real estate compared to what else somebody might do. And then, of course, it's powerful because there's so many different ways that you benefit from real estate. You guys know this. It's not one way. It's that appreciation. It's that leverage Kelly talked about. My experience, having done hundreds of reviews with clients, if you've owned a home for 5 years and you use leverage, you're making 3 times whatever the home's appreciated. So if it's gone up 5%, your return on investment is more like 15%, net of fees and everything, costs and everything. And that's just one way you do it. Appreciation and leverage is powerful. My favorite thing. Not for everyone though. There's a customized, personalized approach to this for everybody. But tax savings, amazing what it does to help you keep the money that you earn. If you buy real estate with leverage, my experience is you're not paying any taxes. I'm not an accountant. Check with your accountant, but if you buy it with leverage, you have extra tax benefits and savings. You get to capture depreciation better, and you're not paying taxes on the gain, the positive income from your real estate. If you buy it with cash, you're probably paying taxes on about half of it, unless you get creative to write more of it off, legally, ethically so. So tax savings, leverage, principal reduction, somebody else paying off the mortgage for you if you have a loan. So powerful. You're making about 2-3% a year just in the principal pay down in the first decade of owning a home. And it goes up over time, 2.5% to 3.5% first decade. Because of course, as you pay out more principal, you have less interest that you're being charged and you get a dramatic return that way. And just the passive nature. So all these things we all know and we think about and why we're attracted to real estate. But for me, better than the features that I have listed there is really the benefits that comes when somebody invests in real estate. And this is yourselves, this is your clients. This is applicable for lots of people out there. I recently helped a neighbor invest in real estate. This neighbor makes a few $100,000 a year. He has a comfortable lifestyle. But I asked him and his wife what it felt like to invest in their first investment property. And he said it gave him hope. He said he wondered, he's 50 years old now. And he said, I felt like I needed to get some kind of a side hustle, something else, because he hadn't done enough for retirement. And when you turn 50, I'm 52, that starts to stare you in the face. And he feels like he's done something now. That side hustle is real estate for him. Because of course, when you buy real estate, you are an investor, you are a business owner, a real estate business owner. And so he's doing something. And a decade's time is a long time in real estate. It's not too late. 15 years is even better. So the confidence, the hope, to me, that's the real power, the belief that something's going to be there for their future. That there's not the 50% losses in a third and a quarter in a year or month's time. That is dramatic what that can do for somebody to be more hopeful and enjoy life a little bit more along the way. And there's an added benefit for you all in this room that a lot of people out there don't get to tap into. So there is accelerated depreciation. Depreciation, because you're a business owner, when you own real estate, you get the same tax laws and benefits that other business owners do. When a restaurateur goes in to start a new business and they buy a refrigerator and a dishwasher, that's equipment they need to run their business that will go down in value. And so the IRS lets them depreciate it over time and reduce their taxes because of that necessary equipment. As a real estate owner, the equipment you need to buy is the home. And you don't get to depreciate the land because they're not making any more of it, but it's typically about 80% of the purchase price, give or take 5%, that somebody gets to depreciate. And so here's an example of a home one of our clients recently bought out in Oklahoma City, a market where people are moving to because its economy is good, the cost of living is lower, and homes cost less. $292,000 4-bed, 2-bath home out there, brand new build. That an investor could then take a normal depreciation on and be able to wipe out about $8,500 of income a year because of that passive income initially, because of that depreciation benefit. So that's part of how they're wiping out in positive cash flow, not having to pay taxes on that, and potentially wiping out a little bit of their other income. But as real estate investors, we all can qualify to accelerate that depreciation and realize more of it first year. Because you can qualify as and again, check with your professionals on this, as a real estate professional, because you're in the business and you're spending 750 hours a year and you're doing more than 50% of your time in real estate than other things you might do, you can qualify and you qualify, you meet the check boxes, but the agents do it beautifully. You can actually be a real estate professional that can have these passive losses in real estate actually affect active income that you might have in other sources, or if you're married filing jointly, the partner might have if they have W-2 income, which is the worst kind of income to have, which gets taxed at the highest, for income tax, for payroll tax, for all of that. Or as a sole proprietor, if you're a sole proprietor, you can benefit from that as well. Please.
Is that depreciation at 0.85%, 75%?
So the way we're doing this, yeah, sorry, good question. Let me try to, I think this will answer. So I'm just making up an approximate numbers of what this would probably look like for an investor. If you have a 292 purchase price and 80% of that is usually about the depreciable amount, that's a 234 amount that's depreciable. And normally for residential real estate, you're going to take that over 27 and a half years. And so that's over, you take that number, divide it by 27 and a half, you get that number. And if you're in the 24% tax bracket, which is where a lot of people are at, plus 4.4% state of Colorado, you're going to be saving about $2,400 a year, money left in your bank account because of that tax advantage, just standard depreciation. However, as real estate agents, as a real estate professional, you can actually take a chunk of that, not the whole thing, not the structure, but there's parts of that home that are going to depreciate or wear out quicker. The paint, the carpet, the cabinets, et cetera. And so what you can do is actually take about 6,500, approximate numbers here, 65,000, excuse me, instead of just the 8,000, and target a year when you might have higher sales and you need to wipe out more money to avoid the progressive tax brackets, marginal tax brackets that we are. 0 if you don't make much, 10, 12, 22, 24, 32% marginal tax rates. If you have a big year, you can target this and you don't have to take it in any one year. You can come back in the future and do a cost segregation and wipe out big chunks of money. Dramatic benefit for real estate agents because you're in the business. Yeah, and you usually qualify. Yeah.
You can do that, not just the year you buy it, do it 2, 3, 5 years.
Absolutely.
Mind repeat the question, please?
Yeah. Oh, thank you. Can you do you have to do it the year you buy it, or can you come back and do it whenever it makes sense, is more beneficial for you in the future? You absolutely can come back in the future and do it. I'm using numbers that are applicable for 2023 purchases. If you bought a home from 2017 to 2022, you can go back and appreciate that quicker, do a bonus depreciation or accelerated depreciation, or do a cost segregation to make that possible. And you actually have numbers better than what I'm showing. These are the numbers relevant to the tax law today. It's been better for the last 6 years, basically. It's even more that you get to say if you bought a home in the last 6 years, you can still do that. So incredible benefit that's available to you to keep more of the money that you're working for, to target with it, to have the long-term benefits of real estate. And by the way, you still get depreciation, most of that, over the next 27 years. You only accelerate some of that. So lots of ways that people can benefit. We're in the middle of this correction, and who knows what happens next with it. Certainly not trying to tell you whether or not real estate's going to be higher or lower a month from now, let alone a year from now. I'm very confident that it's going to be higher a decade from now. And one thing that can really affect that is what happens with interest rates, of course. When home prices go up and interest rates go up, it becomes less affordable, less supply and demand, less people demanding it. And so home prices, flatten, or they don't go up like they normally would. A lot of looking at history is when interest rates got to 5.7% this last year, that a lot of buyers pulled back. We're above 5.7% now. Who knows where we'll be a year from now? What I can tell you, if you look at the 68-year history of the Federal Reserve and they're raising interest rates, 68-year history where the economy got too hot, the Fed taps on the brakes, they slow down the economy, it looks like it's going to go into a tailspin, so they take the foot off the brake and put it on the accelerator, or they lower interest rates again. 68 years that the Fed has been raising and lowering interest rates, and not every time they've done that have interest rates, every time that they've raised them, not every time have they come right back down. There's 2 times on this chart where they didn't. But every time, 10 out of 10 times in the last 68 years, the Fed kind of helped create a recession. Every time there's been a recession, illustrated by the gray bars, interest rates have actually come back down quicker than they went up. So again, who knows what happens this next time? That's a big thing to look at is you look at buyers and people who want to buy, what's happening with interest rates, of course. And we're in that phase now where we could be at a peak and start to come down. The Fed suggested that they're likely going to stop raising, but they'll do whatever they do. So lots of change could be happening. Lots of ways that people get involved in real estate. And by the way, I'm a fan of every one of these, except for the top one. What happens most often is they pay the $25,000 like Kelly did to an education company. You get educated, but you get stuck in analysis paralysis. You don't ever take action. That's the biggest thing that an investor needs to overcome, is just doing it. Even being open to making mistakes and not capturing all the best of it, but just getting started is so worth it. With time, it just works well. But if you never get started, you can never participate in that. Investing locally can make a lot of sense, not as much for cash flow, like Kelly talked about, not as good of a rent return as could be available, but absolutely can work out well in local markets. And then there's certain markets around the country where it tends to work out a little bit better. So right now, there's over half of the U.S. counties where more people are moving out than into. 2 years ago in California, for the first time in 25 years, more people moved out of California than into it. You guys are experiencing a lot of that here, I'd imagine, just like I am in Utah. And so targeting those areas where population's increasing because the jobs are good and the cost of living's low and the wages increasing higher, so you have good quality tenant, tends to work really well. Just letting the numbers do the work for you. And so lots of different ways. Of course, we try to help people invest from a distance so they can stay very passive and do your day job and just let this build up on the side. You give up some of the income, but that income's a small percent of the total return that real estate does for somebody. You pay a property manager, so you don't have to take the middle of the night call. You get all the other benefits, and then you get to just keep doing whatever you like doing and let this work for you behind the scenes. So that's what we do, one-stop shop, and we love to help people do it, whether you do it on your own or with our help. Love questions, love to be involved. But from finding to fixing to financing and then placing tenants in the homes is what we do. We've been doing it for a while now. I've mentioned some of that. I had some good success, pretty dramatic impact that it's had in clients' lives. And that's my favorite thing about it, actually, is how it's impacted them being able to enjoy life a little bit more now and feel more confident for their future. There's some of the markets we're in down here. And it's an approach that is very customized and unique to each person's situation. But it's something that is available for agents. There's, I think, a dramatic appeal in that you keep doing whatever you do best. If you can place an investor in your backyard and it makes sense, great. If you like working in luxury homes and don't want to do this middle of the road, this 3-4 bedroom, 2-3 bath, good neighborhood, top of the bell curve and demand kind of homes that we do, keep doing that. But for the people that don't fit into the box, you can still be part of that and be recognized for introductions. As simple as an introduction, and you can have 25 to 30% of the buyer's commission because of that introduction. So in the homes that we're helping people do, that usually translates to about $2,500, depending on the price of the home. But it's about $2,500, which in and of itself maybe isn't too exciting. But then when you start to stretch it out to, and you look at what our history is, over half of our business comes from repeat business. People coming back and doing it again and again because it works. And with our program, there's commissions available to licensed agents in perpetuity. If you invest one person a year for it to us, and we just do what we normally do, help them get to 5 or 6 properties over the next 5 or 10 years. That's our track record. Which, by the way, normally when somebody's buying a home for primary residence, they're just buying one every 6 or 7 years. But because it's investment properties, so they can have a better future and feel more confident, then agents that refer people to us are in line for all of that to override in perpetuity just from an introduction. And then we do the work. We're motivated to take good care of the client, so we're flexible on you, because it's the only way we stay in business and make more money in the future is to help them have a good business where it's profitable and easy. And so they want to come back and do it again. So there's a webinar coming up. If you want to learn more about it, I know Kelly has it on a paper. We'll go into a lot more details. We're out of time now. Or maybe we're not. We extend. We have a little bit of time for questions. But just, I was hoping, thinking about it, that you all, whatever format and method you take, that you could feel great about introducing people to real estate as investment. It's what they want to do already. They don't always want to be in the weeds themselves, but they want to do it. And so whether you're able to hold them by the hand and walk through it, or you don't want to, or it doesn't fit in the box and you want to refer, but still get a reward for it. If it's one a year, it translates, after 12 years, it translates into hundreds of thousands of dollars for the agent that's referred. If it's one person a year that refer, if it's one a month, it's in millions of dollars. If we just do what we normally do with our clients, a couple $1 million. And so that's something that we'd love to break down and tell you more if you'd be interested in, learn more about it in the webinar. But what questions do you have about real estate investing in general or anything else, please?
Okay, recently we had a ballot it didn't pass by 1 vote for rent control.
Yeah.
Okay. And then obviously with our tax increases, I mean, I have clients that are fixed incomes and they're gonna have to sell because they can't afford the new.
Yes.
So we've got that. I've got clients that they're looking to get out of Colorado to sell their rental properties and go other places. And I've lost 20 clients in the last 2 years because of what's happening with our politics and our real estate here. So we're gonna be going through a huge challenge.
Yes.
Because I bet nickel to a dollar next time, and it will go to ballot, that guy's gonna get bought off and we're gonna have rent control.
Yeah, so very real experience
real.
that you've experienced and concern for the future. Kelly mentioned we do target areas that are owner favorable regulation in the states that we're at. This is where we are now. We've been in other states in the past where the numbers don't make sense anymore, and so we don't help them now. But we're expanding into Atlanta later this year. We're in Texas. We're in Florida. We've had home prices in Florida just skyrocket, and when home prices go up, the taxes go up with the home prices, and because of hurricanes, it's gotten expensive to insure it. And so Florida's been a phenomenal home. We've helped people buy about 1,000 homes in Florida alone over the last nearly 10 years, but it's not as attractive a place right now because of those same things you're talking about. So we just moved to where it makes sense.
Yeah.
We used to help people buy in Vegas and Phoenix and in Utah. We don't anymore. Not that it's not a bad place to invest. It just doesn't have the done for you experience, or maybe it doesn't have the owner protections, some areas of the country, that helps the long-term investor. That's all part of the research and effort we put into. So you don't have to, you guys literally tap in, become an expert. This is a way to expand your expertise and expand your geographic reach for your clients. And again, with commitment for us just to try to make you look good and be there to benefit for long-term from it. So yeah, very real considerations. Other thoughts or questions?
Just like I want to play on that, because that's a real consideration. Her question was really about the rent controls that are potentially coming into Colorado, about the changes, about the taxes going up for the folks that are on Zoom. So I have been referring to Done For You Real Estate now for 10 years. What I'm about is how to create multiple passive income streams. This is just one of them. Now, that $2,500 commission I get, it's not a game changer. I could have sold them a house here and gotten a lot more, right? But if I refer out my investor, what I know is they're getting a better deal. They're going to get a better rent than I can get them here for the money they spend. I bought 2 new builds last year for $270,000 each. You cannot find that in Colorado Springs or Denver. So why wouldn't I give my buyer, my investor, an opportunity to buy that house and still pull $1,800, $2,000, $2,100 rent for it? Because you can't do it here. So I may only get $2,500, but I tell you, every time that person buys, and I have, Steve gets paid every time I buy. Steve likes me because I bought like 8 of them last year. He likes me. So what, all of a sudden you get this surprise check that comes from Done For You Real Estate, because suddenly down the road, 3, 4, 5, 6 years later, they bought a house you didn't even know. And all of a sudden, surprise, you get that. So you may not on the first one get it, but your investors are going to go somewhere else. They're going to figure it out, because they're going to know that they really can't make the numbers work here. They will be searching for other opportunities. You might as well take them and be tied to them for life through this opportunity.
Thanks, Kelly. Yeah. It is a golden goose instead of a nest egg. I mean, it is the golden goose that keeps giving. It is a way to bring residual income into an agent's business, so you don't just have to trade time for money indefinitely and perhaps get to a retirement age and wonder how you're going to be able to. It's wonderful, this residual program, and it's just gotten better. It hasn't been this good for all of Kelly's experience. Like we just came on to EXP as one of their trusted solution providers, and that was part of the agreement. We had to be able to offer that to agents. We just had to make it as attractive as possible, and so it's better now than ever. But it absolutely helps protect. Sorry, there was a
yeah. I just got a question. You guys are talking about the appreciation and growth of our life. We're price factoring inflation, the devaluation of the dollar. Where do you think it's going? Crypto and centralized banking. How does that all play into your guys' projections? And because again, I mean, why it's so much more expensive real estate now compared to 50 years ago is because the power of the dollar was worth more for $1 than a million of those by that same house, right?
yes. Am I okay for 2 minutes here? So you can't see it. I know it's down low here.
Repeat his question though.
Yeah. So the question is, what's going to happen with real estate prices in light of inflation and crypto and everything that's going on out there? What might happen now? No crystal ball, no guarantees. Another great quote from Warren Buffett is that forecasters are in business to make fortune tellers look good. and so I'm going to try to read a tea leaf here. And more than that, I'm going to look at history and try to make some sense of it. So I don't know, no guarantees. What I will say, though, is the inflation that we've been having now, it's similar to not as bad as the inflation we had from 1970 to 1982. And right here, at the bottom of the chart here, you see the straight line of real estate prices from 1970 to 1982. When we had inflation, that capped out at 18.5% instead of the 9.2% we capped out at this last year at the peak. When you had inflation that was there for a lot longer than what it appears to be now, who knows what happens moving forward, but it's come down a bit from 9 to 5. And so who knows, again, no guarantees, but again, don't do it for the short term, do it for long term, it works out. what happened to home prices in a worse inflationary environment than what we're experiencing now is they tripled in value from 1970 to 1982. They tripled during that time because home is a great hedge against inflation. As the cost of goods go up, the builder, they're just going to pass on that cost to the buyer. And as far as the interest rate goes and the payment, it's actually beneficial for an investor as well because you are paying off that loan. Real estate is unique. If you want to grab onto coattails and maybe ride somebody else's success, real estate has that aspect built into it, unlike other investment vehicles where the government wants people to own real estate because it improves the community. The government has agencies to help guarantee loans. They have 30-year notes that no other investment gives you 30-year notes that you never pay more. And so you have this 30-year note, which if rates go down, you can refinance, pay less, but you never have to pay more. And so as inflation goes up and the cost of goods in general go up, you have a payment that is going to have taxes and insurance and HOA fees and repair fees all going up about 50% if we just get kind of normal inflation over a course of 10 years time. But the principal and interest payment doesn't go up a dime. And so what that makes it is when you start owning a home that you bought with leverage, you might have about 2/3 of your gross rents go to just make the principal and interest payment. But 10 years later, you only have half of it because of this 30-year note, unique government sponsored, kind of benefit to it. And so you're paying off that note. Not only does that biggest part of your expense never go up, but you're also paying that note with future dollars, which are actually beneficial to you make more now than you did 10 years ago, I imagine. And somebody, if they just stayed at the salary job, they'd make the 3% a year, cost of living 2.5%, whatever. Future dollars are paying off current debts, and that's beneficial to an investor. It's cheaper to pay off that note later because of inflation. So lots of benefits, hedging against inflation that's available through real estate. It's powerful that way. As far as what happens in short term, again, I tried to stay away from that. But historically, if we're in a longer term inflation environment, that's been good for home prices in the past. Anything else, please?
Yeah. Seems from the chart correlation between stock market price and price of homes. Is there a direct correlation to that, or is it?
That's a good question. I don't know that I have an answer to that. What I will say is there are two types of investments. Yeah, the question is there a correlation between stock prices, the owning companies, and real estate prices, owning property? And what I'd say in general, again, this is a bit of a dodge, but it might be helpful. There are two main things you can do with your money. When you save some money up and you need to do something for your financial future, you can either lend it out and get an interest payment, or you can buy something with it, have ownership. And that ownership could be part of a company, or it could be a commodity, or it could be, of course, real estate here. And so ownership investments obviously have more risk involved. You can buy a stock and it can go to zero. You could buy a real estate and it can have a 30% drop back in 06 to 13, worst in our lifetimes. But yes, there is certainly a correlation. Stock is just a reflection of how profitable a company is, the price to PE ratio, When stocks are more profitable, then owners of those stocks and people in general that work them are making more money. And so when they're less profitable, there's less money to be made. And so there could be some correlation that way. When the earnings are high here, then there's more demand for homes, more money to go into homes. And when earnings get slashed here, like the normal PE ratio is 15 times. Back in 09, we got down to 9 times PE ratio on the S&P 500. I mean, there's not as much money, not as much value. So that's a rough stab. I don't love to get a contact and get you a better answer to that. Good question. Other things, I think we're out of time.
Can we take questions if there are any more?
Yes, please.
Do you have lenders that work with you through all of the questions?
Yeah, good question. So one thing I like about our system is people get to use whoever they want to use for finding, fixing, financing. If they have a preferred, they get to do it. However, we have every one of those pieces in place to make it as easy and carefree as possible. So yes, is the short answer. We finance, we've got an internal team that can help finance it. Insurance companies, making sure they have the right insurance for the different geographic considerations, weather considerations. The property management, work with a regional team that's in states across the country, very top tier professional team that we feel very confident in. We don't own them, but we've partnered with them and we're tied at the hip with them. because we're confident they're going to take good care of our clients. And if they don't, we can always go somewhere else. And so we get to have some influence for our clients, ongoing experience. And so every piece of this puzzle or every need is in place. But if somebody has something else they want to do, they can do that. Yeah.
And Mike, I stopped them when I started with them because I had my own lenders, and as I shopped them, I finally came back to not even messing with it because the lending that they do and the services that they provide on insurance, I shopped all the property and casualty insurance, and it just wasn't worth it because frankly, they're working for thousands and thousands of investors. So they really had pulled down the pricing on everything.
And it's brokerage, so we go wherever the price makes sense, that has good quality, safety with it as well. Yeah.
The other thing I want to point out is Mike mentioned that as a brokerage, Steve Earle owns the brokerage and that they just moved into EXP. That is huge for all of you EXP agents, because what that means is they have become the preferred solution provider for 88,000 agents at EXP to do real estate investing. So Steve has met with Lynn Sanford multiple times, Leo Pereira multiple times. They're going to be put on stage as the provider. So for us to have the one-on-one that we get with Mike here every quarter is amazing. And to be able to meet with him face to face, it's amazing. But that will be a huge benefit for us as agents, whether you're EXP or not, but for us as agents at EXP, because they will be training in EXP University. They will be teaching everybody how to do real estate.
Yeah, it's pretty neat. Glenn Sanford loved what we are offering agents within EXP to automate this part of the business, real estate investment business in the box kind of approach. You keep doing you, we'll help you with this part of your real estate and generate perpetual income, residual income for years to come for you. Yeah, and more transactions, more money, right? Good question. 15-year history, cash flow has been a big focus. Go to areas, give you an example. I bought a home in Tennessee a year and a half ago, one of the markets we covered. My home in Utah was worth $630,000 the day I closed on a $310,000 home there. It was projected my home in Utah would rent for $2,200. My home in Tennessee rented for $2,100. So literally half the price home renting for similar rents. That's how this model works. Pay less, get more income so that you pay somebody else to do the work. For 15 years, that's been a big part of the return. But when home prices are higher and interest rates are higher, it's harder to come by. But yes is the answer. We are still helping our clients positive cash flow, but it may be dozens of dollars instead of $400 or $500 today, but they still get all the other ancillary benefits. That is something I even froze by who, oops, well, that's all right. And have a solution in place that can help them save money with taxes and get other benefits monthly, annually now, as that rent builds up over time. So a lot of the examples are maybe they're getting up to $100 in positive cash flow now, but it'd be projected to get $400 or $500 or more positive cash flow 10 years from now, just with the normal expected expense increases and everything else, the rent increases that we do. And so now is not the time to, if you're going to have high cash flow in real estate today, you need to buy your homes with cash. That's still available out there. 5, 6, 7% cash on cash returns if you don't have a loan on it. With a loan, we're getting people 2% cash on cash return, but then they're getting another 2%, 2.5% principal reduction. They're getting another 2.7% tax savings. They're getting 6 or 7% in total cash while they wait for rents to go up. And by the way, 10 years from now, you won't even remember what the first year's cash on cash is, because real estate's done so much more for you. Turn one home into 2 and then 2 into 4, tax savings, the change of mind. That's the biggest thing, just a paradigm change in what's possible for you and your financial future or for your clients. It's just dramatic. Sorry, long answer.
No, okay. Just like Kelly kind of can assess what we've got going on in our investments, do you also invest or do you offer services to look at we own 4 rental properties here in Colorado Springs, but it would be worth having it looked at of like, hey, what if we sold these 2 properties, invested in 4
Absolutely.
properties somewhere
Yes.
else? Would that be
Yeah, I love those conversations. I'm kind of a numbers geek, chart geek. Don't tease me. I hope you call and we got to do it. Whether you do business with us at all, I'd love to help make sense of those kind of conversations. And we have a team of people that help too, but my role with the company ultimately is once somebody's bought a home and before, if they need it, to have comprehensive one-on-one planning, not taking the place of any other advisor they work with. I'm not a licensed advisor anymore. I gave that up because I love what real estate does. And this is my focus. I burn bridges, but I have a fair amount of background in understanding what different things can do for somebody and love to help make sense of that. Please put me to work. Love to. Yes, please.
One market that stands out right now.
So it really depends on what somebody's trying to get. Oh, thank you. Sorry about that. So what market now is the hot market? And I would say it depends, you know. So I learned from sitting across hundreds of the desk from hundreds of people talking to them about their finances. Big believer that personal finance is much more personal than it is finance. It's much more what's going to help me sleep at night, what's going to help me accomplish my goals than it is just what's the numbers, the data, the dollars. I'm going to give you a finance answer, a numbers answer. And it depends on where somebody's trying to go for cash flow. Tennessee is still a great market for cash flow. Rents are high, but taxes, insurance, everything else of owning is lower. That's a great market still for better market for cash flow. Oklahoma is very attractive right now. All the markets that we're helping people buy in have about 3 to 5 times the population growth as other areas of the country as a whole. And so they are all good markets. We wouldn't be in them now if we wouldn't recommend it, but some of them work better for cash flow. Others will work better for appreciation. Dallas, Fort Worth, not a great cash flow market right now, break even, but incredible growth that's going on in Dallas, Fort Worth area. And so for somebody who's trying to grow, I look at it as 2 phases of life. Accumulation phase, just like you own stocks with traditional investments, and then you sell off and buy bonds later. If somebody's in the accumulation phase or the growth phase of life, own homes in areas where they're going up in value, and use leverage if you have a risk tolerance and some savings for it. And then as you get closer to retirement, start paying off those homes or sell in growth markets and buy in income markets. I know I haven't answered your question exactly, but it depends. Dallas, if it's growth for the future, Tennessee, if it's cash now, or the 2 markets. I really like Oklahoma too, though. They all work for different purposes.
Like, what do you think of the Carolinas?
Yeah, so Charlotte, Carolina is an area we help people buy lots of homes. Very strong economy. It's good. We're not active there because they have requirements for placing offers that, especially when the market was hot a year ago, where you would give up earnest money if you didn't close on it, and it would be $5,000 or $10,000. And so we stepped back from that, and we're not active in Charlotte right now, but we like the Carolinas as a whole. Yes, it all goes back to, is there more people moving in than out? Is the economy strong? And then you start to look at the price of homes and the rents and some of the other macro factors as well.
Well, and Mike will be here through the afternoon. He doesn't leave until later. I know he's meeting with Roberta right after lunch. But
Yeah, I would do that.
so we're going to break for lunch. There's lunch at the back of the room. Grab something, bring it back. We're going to spend a little time talking about the other side of the equation, which is how to create that leverage